To me, gold and silver are wealth. They always have been. I've never looked at it as anything other than the way that I hold my wealth. All those dollars come home. If you think inflation is bad here now, watch what happens when they all come flooding home as there's massive dollar divestiture. And if rates spike the way they would in a hyperinflationary event like that, there's your great reset. More money has been created in the past 2.5 years in the history of the United States. What does that sound like? Inflation. That to me is the linchpin to this entire system, and it's frightening to me. While I believe there is a fine line between pessimism and realism, that's never been my main goal. That the music's going to stop. And I think we are so far down the rabbit hole, and we've created such distortions and misallocations in capital and resources that there's no way out right now. It's one or the other. Gold and silver are wealth. It's not an investment to me, it's wealth. And it's been wealth for 5,000 years.
G'day, Shae Russell here. Welcome back to my channel where we talk all things rocks and stocks. Now, today I am dipping into the archives once more to bring you an interview with my friend Andy Schectman. Now, Andy Schectman is the managing director or CEO or basically top brass of precious metals firm Miles Franklin Precious Metals over in North America. Now, I've been fortunate to interview Andy Schectman numerous times, and every single interview I've always done has left me walking away thinking differently. Today's interview is going to hit a little bit different. Now, first of all, I think this is an interview you need to watch twice, not once, but twice. I'm knocking things. I've now watched this interview 5 times, and each time I've walked away with something different. And the reason is Andy delivers an awful lot of information in a short space of time. So I highly suggest, as part of today's process to absorb everything Andy says, I definitely recommend you should watch it twice. But what are we going to cover today? Well, Andy tackles a lot of subjects in an incredibly short space of time. He talks about the China's Belt Road Initiative, and how this is the world's largest infrastructure project that the US isn't part of, and what that means for Americans. He then touches on, we talk the Fed. You can't talk to somebody about precious metals and not include the Fed. We then talk about the Fed and how the big money is banking on the Fed to pivot, but that may actually is not what's going to happen with interest rates. And there's a fantastic quote from Andy somewhere in here that the Fed's left with some uncomfortable choices, and they really are death by recession or death by depression, and neither of those are going to produce desirable outcomes. Finally, he also covers de-dollarization, and I really like Andy's take on de-dollarization today. And the reason for that is too often people or commentators, when they talk about this, is it's all hyperbole, and the whole idea is that there's going to be this catastrophic currency death for the US dollar. But that's not really how currencies fall out of favor. But what Andy is pointing to is he talks about how the weaponization of the US dollar in regards to sanctions against Russia is driving other countries to slowly move away from the US dollar as a central part of their payment system. And he talks about the impact that this is going to have in the long term on gold. Now, as always, make sure you stick around to the end, because we're going to talk about what we've learned. I'll hand you over to Andy now. Andy Schectman, president and owner of Miles Franklin Precious Metals. Andy, how are you?
Shae, it's great to be back with you. Thanks for having me. I'm great. I hope you are too.
Absolutely. Look, we haven't seen each other in person in a considerable period of time. Now, for everybody watching, we are coming to you from the Rural Investment Symposium, this year being held in, now let's see if my Bogan accent can get this right, the Boca Raton.
That's right.
In Florida. Now, last time we met was in Vancouver. And our first meeting, just to give everybody a little bit of context here, you got up on stage, you gave this incredible presentation, and I stalked you off stage like a creepy, scary lady and basically demanded to get you on camera, and I have been thankful for your subsequent interviews ever since.
Pleasure has been mine, truthfully.
No, thank you. Now, let's get started. I didn't have to stalk you off stage today with your presentation, but I want to kick off with probably the 4 most pressing topics of your presentation today. So basically, the premise that you put forward is that there are 4 significant events that are happening, but you don't actually think anybody's put those all together yet. So tell me, what are the 4 events that you see that are happening, and why are they so interconnected?
Yeah, well, they go back to 2019. The first was the reclassification of gold as the world's only other Tier 1 reserve asset. And if you realize that since the end of the war in 1944, there's been one Tier 1 reserve asset. It's been the US dollar, and I guess by extension the US Treasuries. A Tier 1 reserve asset, Shae, is a riskless asset by central bank standards. And so literally for the better part of well, I guess you could call it almost 80 years, there's been one set of tier one reserve assets, dollars and treasuries. People in this industry, many of them thought that at some point there would be a complement to the dollar or a tier one asset, and they would call it special drawing rights from the International Monetary Fund, which is a conglomerate of nearly 200 countries from around the world that would contribute to a new world reserve currency. That was always the conventional popular wisdom. And out of nowhere in 2019, after 2.5 years of the Eastern European central banks front-running this decision by not only repatriating their gold out of nowhere, starting with the German Bundesbank from the US Federal Reserve, and also from the Bank of England, but also going on a massive buying spree in 2017, 2018, and 2019. And then out of nowhere, reclassifying gold as the world's only other tier one reserve asset. So it became very evident, first and foremost, that the central bankers take care of themselves first, gave the Eastern European banks a heads up. And ironically, other than the Bundesbank, the majority of the banks that did repatriate their gold, that did massively accumulate it, are the same ones that are doing so today. And these are the European banks like Hungary and Poland and Turkey and the Czech Republic, and these countries that are part of the European Union but trade in their own currency. So they don't trade in the euro. So they have been voraciously accumulating gold and repatriating it. This was signpost number one. Signpost number two to me was, and you know, as a side note, I brought up to the audience, I said, I'm going to venture to say that most of you have never heard of these things. Don't show me your hands, but think. Is our media really telling us what's true? Because all of these things point to what I believe is de-dollarization on a massive scale, and the ramifications of that are very frightening. Signpost number two, Shae, was the Chinese Belt Road and Rail Initiative. Most people that I talk to don't have any idea what this is, but it's the largest infrastructure project in human history, and it's connecting Asia and Africa and parts of Europe. When you talk about ambitious infrastructure programs, this is the Panama Canal on steroids, and it is connecting 75% of human population. It is connecting 45% of global GDP even before the industrialization, and the United States is not part of this. And so you are witnessing 3/4 of human population being indoctrinated into a new currency because all of the transactions, or the majority of the contracts, are settling on what is the Chinese digital yuan, a new central bank digital currency that has been issued parallel with the paper renminbi. And I think that this is a really very, very important thing as we move further and further down the rabbit hole here, and I'll get to that. I will actually tell you how I put these things together, since it's just you and I on camera, and since no one else is here. The third biggest event of my career happened the day the United States left Afghanistan. And you know, I know you're Australian. Living in America, there was always a theme that we never leave anyone behind. No soldier is ever left behind in war. That was something that would have been considered unfathomable in the country that I was a kid in, the country I grew up in. And the day we left Afghanistan, in a very unharmonious way, with people hanging from the wing of a transport plane, from allies that had helped us in the war being stuck behind enemy lines with their biometrics given to the Taliban, with our own Americans not being able to make it to the extraction and being left behind, that's unbelievable. And I think there's no coincidence in the timing. Now, before I tell you what happened, I have to preface it by asking a question, not to you, because you know the answer, but to you. And that question is, what makes the dollar the world reserve currency? And most people don't know. And at the end of World War II, the dollar was anointed the world reserve currency, taking place of the pound sterling. And the promise that we made to the world was, as governments, you can exchange your dollars into gold at any time for a fixed rate of $35 an ounce. And this is why the U.S. held most of the world's gold, because the world, who had a non-interest bearing piece of metal, were able to give us their gold. We would hold it. We would give them dollars. They would buy treasuries with the proceeds and earn interest on what was a non-interest bearing asset. And then they could always exchange it for $35 an ounce. So it was a good deal for them. So this was the case until pretty darn close to the end of the Vietnam War in 1969, 1970. President de Gaulle from France realized that the U.S. was printing more dollars to fund the Vietnam War and issuing more treasuries to do so than there was gold held at the Treasury. So, doing what he was allowed to do, he sent warships filled with dollars to New York Harbor, said, give us the gold. And we did. They bled down half of the gold or more held at the U.S. Treasury. And so Nixon closed the gold window. And it was only supposed to be temporary, but he went back on our promise in August of 1971. Boom, closed, done. You can no longer trade your currency in for dollars. So or for gold rather. Your dollars for gold is what I'm trying to say. And so
it's been a long couple of days.
It has, and still two left. So it rendered the dollar fiat, backed by nothing. 3 years later, Henry Kissinger flew to Saudi Arabia and struck a deal with the Saudis saying, we will protect you. We will provide military support, we'll sell you munitions, but for that you will denominate oil globally through OPEC in dollars. And it's been that way for almost 50 years. And so the third biggest event of my career is the admission that came out the day after we left Saudi Arabia. And I think there is no coincidence in this timing. It was done specifically for effect. And that is that Saudi Arabia announced a joint military cooperation arrangement and agreement with Russia. So for the first time since 1974, there's another country protecting the Saudi kingdom, and it is that protection of the Saudi kingdom, Shae, that has given us the dollar hegemony, that has given us the petrodollar. A day after that, Nigeria announced the same relationship with Russia. Nigeria is the third or fourth largest petro-producing country in OPEC, and so this is a very ominous sign. The day after that, Russia announces that all of their nuclear-powered submarines are equipped with hypersonic ICBMs, a technology that the State Department subsequently came out and said, we're very concerned about this technology. We don't own this technology. These are the missiles that go way up in the stratosphere at Mach 10 and hit the ground at the speed of an asteroid. They can't be knocked down. It's scary. Anyways, we're seeing this de-dollarization process continue and continue and continue. And the fourth peg in all of this is the weaponizing of the dollar. By kicking Russia out of SWIFT, we have, I believe, accentuated and expedited the demise of the dollar. We have made all of these other countries say, are we next? Could this be us who finds our assets sanctioned and frozen? You look at a country like China, who has sold $100 billion worth of treasuries in the last 6 months. And, they have their eyes set on Taiwan. Why would they ever buy our treasuries if they feared, retribution, if they feared nationalization freezing of their assets, sanctions put on other assets, keeping or freezing and actually taking possession of their assets here domestically? I think that's why they're bailing. And so what I think we have done by weaponizing the dollar is hasten the demise of it. Subsequently, we have seen things that are quite frightening, actually. We see Saudi Arabia come out and say, we are contemplating joining BRICS. Now, I don't think you make an announcement if you're contemplating. I think you say you're contemplating after you've already made the decision. And if you think that Biden, who hasn't even gone to the Mexico-Texas border with this massive influx of illegal immigration, this is a massive problem here domestically. Instead, he flies to Saudi Arabia. And in doing so, I don't think he begged for oil. I think he begged for them not to leave the petrodollar and to move to the BRICS nations. So this is a huge deal. And then 2 days ago, you see Russia and China announce that the BRICS nations are formulating a new world reserve currency. And here it is. So you're seeing a massive move away from the dollar. Along the way, we see Iran and Venezuela join the BRICS nations. We see India, and we're their largest trading partner, now came out and said all trades domestically, import or export, will be in rupee, not in dollars. You see this constant theme of deals being struck. We all know what Russia is doing. They're selling their oil and their natural gas and their coal for ruble. They just did a deal with arms and natural gas and oil with India to exchange in rupee and ruble. All of these settlements would have always settled in dollars as the world reserve currency. Not happening anymore. This is a massive deal. So what does it mean? Where could we go from that is the question. Put all these pieces together, and here's what you get. When Klaus Schwab said, there's going to be a great reset. I thought he was a fool. But look at really just maybe how prophetic that could actually be. So if you realize that in the past 2.5 years since the beginning of COVID, the U.S. has produced more dollars in that short period of time than they have in the entire history of the United States. So that environment where you have massive inflation and very low productivity as people were paid to sit at home and spend money, creating this huge inflationary problem. But the real inflation over the last several years with the manipulation of interest rates has gone into assets, into the manipulation of asset classes. When you talk about blowing all the money supply up the way that they have, this money has found its way into stocks, bonds, and real estate, mostly through hedge funds who will borrow money at next to nothing, blow it up into stocks, into bonds, make huge profits, into real estate, buy 50,000 houses and sell, rent them through Airbnb in a fund, or all of these creative ways of taking this easy free money and blowing up asset classes. And you saw it where stock portfolios double or triple in a year, where homes down here in Florida, the house I bought a year ago has doubled in a year. That's not how markets work. Cryptocurrencies that go up 10x, that is not how markets work, and it is all attributed to a massive increase in the money supply and a suppression of interest rates. So with that in mind, and with the assumption that the Federal Reserve has no intention on blowing things up, right? So the Federal Reserve, you know, a report just came out the other day, Shae, and if you need to stop me and ask me questions, please feel free.
Absolutely not. I am loving this. Just keep going.
So
everyone's getting the presentation for free. They don't realize how lucky they are right now.
That. So there was a report that came out, and I think the acronym is the National Bureau of Economic Research, NBER, something along those lines. And they came out and said, look, we've changed the way we measure inflation in the United States. We've stripped out food, energy, and housing. We did that after 1980. And so if you realize that the 13.6% interest rate, or inflation rate rather, in June of 1980 would actually be, if measured by today's metrics, would be 9.1%. Well, that's exactly what our CPI is, 9.1%. So you could actually assume then it's really closer to 14% based upon the way they used to measure it. In 1980, in that environment, Paul Volcker raised the federal funds rate, the then Fed chairman, to 19.75%. And that squashed inflation, immediately deadened its tracks. But can you imagine what 19.75% on the federal funds rate would do to this economy, where, excuse me, you have mortgages that are going for 20, 21, 22% on the 30-year mortgage, where trillions of dollars in bonds were sold at 0 and 1%, where corporations have made all of these infrastructure enhancements and taken on all of this debt based upon a low interest rate environment. You raise rates and you start to kneecap the entire system. You blow up the stock market, the bond market, the real estate market. And the Fed doesn't want to be the one that ignites the fuse. So much so that them getting tough on inflation means raising rates to 2.25% over the last few months from 0, which is a big move, but it's still negative 6.75% based off a 9% inflation rate. 9% inflation, 2.25% on the federal funds rate means a negative real return of 6.75%. That's not getting tough on inflation. They tell us they're going to sell off their balance sheet. They call it quantitative tightening. They raised their balance sheet from $800 billion to $9 trillion from 2008 to where we are now, and they've only shed $40 billion worth of assets, and they realize that if they sell mortgage-backed securities and U.S. Treasuries, interest rates spike. I believe they don't want to be the ones in the history books that blow everything up. So you create a villain. That villain is Russia and Putin and Xi and the BRICS, because we weaponize the dollar, we push Russia out of SWIFT and right into the open arms of the Chinese, who have the CIPS, the cross-interbank payment system, which mirrors the SWIFT, who has the Shanghai Gold Exchange, which mirrors the COMEX, which has the Chinese petro-yuan bond, which enables them to sidestep the petrodollar in settlement, which is immediately convertible into gold on the Shanghai Gold Exchange. You have this infrastructure set up. You got the Belt Road Initiative, which is connecting 75% of human population. You add the other BRICS nations. This is just China and Africa. It's the K in BRICS. And, you know, so, or the S the CS in BRICS. Anyways, you still got, when you add all of the other countries, and you got Iran who just joined the BRICS, you got Venezuela who just joined the BRICS, and now you have Saudi Arabia saying, we're going to join the BRICS. Huge deal. You're talking 90% of human population. So how does the Great Reset happen? You blow asset prices up to the moon by easy money and low interest rates. You then come in and weaponize the dollar. You push everyone out. You destroy the way of life for the Saudis by going to a green economy away from fossil fuels. So we're basically destroying what they know as their infrastructure or their way of life centers around selling oil, and we are moving away from that. You can understand why they would want to leave the dollar hegemony, leave the petrodollar, and move to another system, because I believe, if you look at the inverted yield curve right now, the big money believes that the Fed is going to pivot and go back to lowering rates and easing money supply. They will have lost all credibility. So how does the Great Reset happen? You have asset classes at all-time highs, and they're all inversely correlated to a rise in rates. The Fed does not want to get tough on. They're jawboning. It's lip service. They're not going to do it. And they've proven so by their pussyfooting around and raising rates just this much instead of really getting tough on inflation, which blows up the economy. So in their minds, it's either death by inflation or death by depression or real bad recession. So instead, they have a villain. And by weaponizing the dollar, they have created a villain. Now, here's where it gets very scary. All it would take, really, and I think two things will happen that will incentivize this. Number one, if Saudi Arabia says, thanks for the memories, guys, it's been a great run, we're going to issue, now that we're joining BRICS, oil in not just dollars, but ruble, yuan, rupee, gold, and the euro. And if you realize that every country on the planet for the last 50 years has had to hold oil or US dollars to buy oil, if they all start to dump dollars, which I believe they would, as the dollar becomes a hot potato. One country dumps it, the next country dumps it, the next country dumps it. Oh God, sell, 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 sell. All those dollars fall. Where do they go? They come back here. If you realize that we are but a small fraction of human population and the rest of the world has had to stockpile dollars for 50 years, all those dollars come home. If you think inflation is bad here now, watch what happens when they all come flooding home, as there's massive dollar divestiture into other currencies to buy oil. When those dollars come home, creating hyperinflation, peg number one drops, the dollar. Peg number 2, 3, and 4 are all inversely correlated to a rise in rates, stocks, bonds, and real estate. And if rates spike the way they would in a hyperinflationary event like that, there's your Great Reset. And it's like that. And if Saudi Arabia made this announcement on Monday morning in Saudi Arabia, it's the middle of the night here, we'd wake up to markets limit down, because those dollars come screaming home. Interest rates spike as a result of the inflation. Stocks, bonds, and real estate are all at all-time highs, inversely correlated to that rise in rates. There's your Great Reset, and there's your villain, and that's the BRICS nations and OPEC and Saudi Arabia. How could those sons of bitches have done this to us, is what they'll say. It is no different than our administration blaming Putin for inflation. Inflation has nothing to do with Putin. Inflation is always a massive increase in the money supply coupled with a decrease in productivity. Does that sound anything like the last 2 years in this country? Everyone's been paid to sit on the couch, eat bonbons, and play video games, and have been given tons of money to do so. The money supply has increased exponentially, and more money has been created in the past 2.5 years than the history of the United States. What does that sound like? Inflation. So we picked a villain instead of blaming who was to blame for it. And I think if you talk about intended versus unintended consequences, one of two things becomes very clear. Either our leaders are inherently idiotic and had no intention of pushing the rest of the world away from the dollar, or they knew exactly what they were doing, and they realized that we have milked as much as we can out of this Keynesian debt-laden system, with interest rates bound to rise, all of it accumulated at super low rates, that the music's going to stop. And if you want to blame the Fed for doing so, you have now put them entrenched in history books as the dumbest, most nefarious group of bankers in the world, and instead they flip-flopped it and made it look like it's the rest of the world, if it's intended, knowing exactly what would happen, that we would see this spike in interest rates as dollars come home, and you end up with a situation where you now have a villain for destroying the American way of life. And I really hate saying this, Shae. I got 3 kids. My youngest is 15, but I think it's happening. If you look at all of the move away from the dollar, the coalition by these BRICS nations, the BRICS growing the BRICS nations, the Petrol Reserve Standard moving away from the dollar, the Belt Road Initiative, the reclassification of gold as a tier 1, put them all together and take a step back. Like, whoa, the U.S. isn't part of any of this. And we represent but 10 or 12% of human population. The rest of the world is saying it's been a nice run, but we're now entering, as Zoltan Pozsar, the Fed repo market guru, says Bretton Woods 3, a system based on commodities, not based upon debt and debt instruments. And I would simply say to you, the Fed is but a sideshow, and the real main stage show is what happens with Saudi Arabia, with the BRICS nations, and the divestiture of dollars. That, to me, is the linchpin to this entire system, and it's frightening to me.
It is frightening. Also, too, that whole summary you've just given us, and I wish we now had some water for you because that was quite a long answer for you. This is why I continue to seek you out, because that is quite a detailed answer. But also, too often when we provide market analysis, we talk about European markets and the US market, and I'm an Australian, no one cares about the Australian market. We forget about all the other pieces of the puzzle that actually round out global markets. And this is where your analysis is continually valuable, because you're not looking at it from an American-centric point of view. You're looking at, well, what are we not looking at? And that's basically what you've just pointed out there. A very brief, lightly touched on version of some of the most, some of the incredible things you've put out there lately. So this is why I always seek out Andy. And I will be in your inbox again in a couple of months, I can guarantee it. Now, I know you've got other things to get to, so I want to touch on 2 more questions going forward. Now, you and I, you've been in the precious metals business a lot longer than I have. I've been involved in precious metals for about a decade. You are coming on
33 years.
33 years. Now, you and I have one thing in common, and I didn't actually know this until today. You have never used fear to sell gold.
Never.
And that is something I've never done either, because I don't believe that we should be using the fear argument to sell gold. Can you tell me why you have actively not used the fear argument to drive people to buy gold? Because fear's easy. Fear sells. It sells itself.
Because I think it's transparent. And while I believe there is a fine line between pessimism and realism, that's never been my main goal. I started in this industry when I was 19. My dad and I started the company. And he said to me, there'll be one rule and only one rule, and if not, I'll fire you. Okay, I can deal with one rule. What's the one rule? He says, you'll buy something every 2 weeks, period, or I'll fire you. That's the only rule. And the rest, we'll feel our way through this together. And we started from nothing in a one-room office. Recently eclipsed $7 billion in sales by doing things the right way. But the only rule that I ever had, of course, he's been retired for 2 decades, but I still honor my promise to him, and he won't fire me. I've bought something every 2 weeks.
You mean some gold?
Yes, gold or silver, anything. Even if it's 1 ounce of silver, I've done it every 2 weeks for 33 years. I have never, ever, ever missed a 2-week period. I look at it as wealth. I look at it as wealth that I hope I never, ever need to use. If I do, I'm damn glad I haven't. And it's not just for chaos and an emergency. It could be an opportunity. I think when the dust settles, there will be a lot of opportunities. When rates rise and these asset prices try to find equilibrium to fair value in relation to real interest rates, you will see market valuations on many things collapse. And there will be opportunities for those who have enough dry powder to take advantage of it. To me, gold and silver are wealth. They always have been. I've never looked at it as anything other than the way that I hold my wealth in a world of decreasing privacy. And if I don't need to use it, I give it to my kids outside of probate. It's very, very private. It's invisible. And in a world where privacy is decreasing and things are as chaotic as they are, I fall back on 5,000 years worth of history as wealth. And you go back and look at kings and queens and emperors and pharaohs, none of them ever called a gold broker to buy gold. They owned it as immutable wealth to pass on through the generations. That's how I look at it. But when I take a look at what's happening right now, I look at every single asset class that you can buy, the main ones, stocks, bonds, real estate, that have all been blown sky high, and you look at gold and silver, you scratch your head, why the heck not? Now, we can get into a long discussion next time on manipulation and why the markets have been held down. It's fair to say that there are 3 traders right now facing RICO charges right this minute that are on trial for manipulating the market. One of them, Michael Nowak, the former head trader for the precious metals desk at JP Morgan, on top of JP Morgan's $920 million fine for manipulating the market, the short answer to why the markets have not responded the way others have, the metals market, is I believe it's the canary in the mine shaft. And if we're going to lie to the world about inflation, we're going to lie to the world about a lot of things, rising gold and silver signal the frailty of the market. It's pulling back the cover, the curtain, and seeing that the Wizard of Oz is just a little feeble old man, not the booming voice that everyone's afraid of, until you realize, oh my gosh, you know, the emperor wears no clothes. So I think that I think that selling fear for all of these years not only is transparent, but it's a lie, and I can't get behind something that I don't truly in my heart believe. But as I said today, it's the first time in my whole career that I'm afraid, I'm concerned, because I don't see a way out of this. Even if you take everything else out of the equation in terms of the de-dollarization and the move away from the petrodollar, which I think would be foolhardy, I think the Federal Reserve, if you simply rely on them to get us out of this, it's death by hyperinflation or death by depression. Take your pick. You raise rates, you blow everything sky high because everything is inversely correlated to it. You don't raise rates. If you pivot, like the smart money thinks we will, you choose what every other government has done since the beginning of time, inflation and printing over austerity and tough decisions. And I think we are so far down the rabbit hole, and we've created such distortions and misallocations in capital and resources that there's no way out right now. It's one or the other. And that's why I think they're going to choose the victim, or the villain, and we're the victim. Instead of the Federal Reserve falling on the knife, they're going on the sword. They're going to blame the rest of the world, who is doing what any smart entity would do if faced with the circumstances that they are right now, with a complete and total abysmal mismanagement of the world reserve currency.
Oh, incredible. Now, we are nearly out of time today. You have your second session to get to for this afternoon, and I absolutely don't want to miss that one. I think I might have got a little bit of a sneak preview of a couple of things, and there's frozen Snicker bars out there that we also want to touch. But before we go, I have one thing I want you to share with investors, and that is, what is the one thing that they need to know about investing if they're brand new to the markets?
Gold and silver are wealth. It's not an investment to me, it's wealth. And it's been wealth for 5,000 years. And I think you accumulate it because it's wealth, because there's great uncertainty. And I believe there's great revolution, renaissance, if you will, in finance. And I think it is a move away from speculative debt-laden instruments into real tangibles. I think that is where we will go, where removal of counterparty risk becomes very important. And you know, Doug Casey has made a statement very famous. He says gold and silver are the only assets that are not simultaneously someone else's liability. And in a world of contagion, and in a world that is very incestuous and very tied together, where the systemic risk becomes magnified when one entity fails, because they're all tied together through derivatives and through exposure to mortgage-backed securities and all sorts of things where there's counterparty risk and insurance risk, and I think that will come into focus when things start to blow up. And so holding gold and silver by yourself, on your person, hidden away somewhere, removes that counterparty risk, and I think when things get dicey, that's going to be the most important thing. So for me, look at it as wealth, take physical possession of it, never buy it on margin, and hope you never need to use it. And if you do, you're darn glad you have it, unless there's a hell of an opportunity that arises. And then you're glad you have it, and you're glad to use it. And if not, give it to your kids, because there are very few things in the world that not only has lasted for as long as it has and is still considered money, but in the year 3000, when the bills in our wallets are hanging from a frame in the Smithsonian and we're all using central bank digital currencies, gold and silver will still have their place. And I think that's the way I look at it.
Andy, incredible answer. Also a great place to leave us. What can I say? Thank you once again for being here.
Shae.
I love our little chats, and I hope to do this again in a few months.
I'm always willing to chat with you, whether it's in person or you know, across the pond on Zoom or whatnot. But thanks for having me.
No worries. Now, actually, before I go, if people want to hear more about your thoughts, where can people find you? So
we have a website that's pretty well sucky, and we're building a brand new one that'll be done in the next 30 days or less, and that's milesfranklin.com. You can Google my name, Andy Schectman, and there's a plethora of videos, thousands of them, But Miles Franklin, my email is Andy@MilesFranklin. Your listeners are more than welcome to send me an email, and more than happy to answer questions. And for those people looking to purchase metals, our new online website, again, will be done in a few weeks. If not, you can always send us an email at Andy@MilesFranklin or info@MilesFranklin. Request a up to the moment's price sheet, and we send that out, and our prices will be amongst the very best in North America. So I appreciate you asking that question.
No worries. Look, Andy, thank you for being here. It's been great.
My pleasure.
Thanks. Did you get all of that? This is why I said it was the kind of interview that you really need to watch twice, because Andy imparts with a lot of information in a very short space of time. And this is also, too, is very much a good recap of the presentation that he gave at the Rural Investment Symposium last year. Now, I particularly liked Andy's take on, moving away from oil and the electrification of the US. However, I think one of my favorite things here is, this is when we get to our final question, is too often people use fear as a way to sell gold and silver. And this is something Andy and I, as you know, just discussed at the end of the interview. You don't need fear to buy gold and silver. You need to, we as a society need to move away from the idea of collapse and theft and unstable government policies and inflation as a reason to buy gold. Gold and silver for that matter, are genuine forms of wealth, and they have been enduring forms of wealth for hundreds of years, if not thousands of years. So I really liked Andy's take that we don't need fear to encourage investors to buy gold. We just need to point to the facts that gold and silver is a genuine form of wealth. And you know what? I loved his dad's approach of making him buy a little bit of gold and silver every 2 weeks. I actually think that's a great savings habit to get into. And that is it for today's interview. Make sure you hit like, subscribe, and follow for more, because I have a lot of new interviews that I'm going to be uploading over the coming weeks, and you are going to be very surprised at some of the guests that I have managed to bring on. All right, that's it. Hope to see you next time.